Webale nnyo omulabi waffe wadde Business Trends UG erinnya nze Kazibwe Isma era nga nkoze ne Badru Kigozi ku kamera. Tukwebaza okubeera nti ogoberera omukutu guno era ofaayo nnyo okumanya ebyenfuna engeri gye bitambulamu. Bwe tuba twogera ku business ebyenfuna tuba twogera ku nsimbi. Ensimbi singa oba ozikutte bubi zisobola okusaanawo mu business. Bw'oba ozikutte bubi ziyinza okukuleetera obuzibu obutali bumu. Kakano bagavana abeegattira mu mukago gwa East Africa oba Mawanga agakola East Africa bateekawo akakiiko kayite the East African Community Monetary Affairs Committee. Kano akakiiko nga kakubaganya ebirowoozo ku butya ensimbi zino engeri gye ziyinza okukwatibwamu. Bannabizinesi engeri gye bayinza okuzikozesaamu bonna n'abasuubulagana ebintu okubeera nga tezireeta buzibu ate nga buli muntu asigala alina ensimbi ezo. Kakano tukusaba weyunge ku bakugu bano eno batunnyonnyole engeri ki gye tusaanye okukozesaamu ensimbi zino ate zireme kutuleetera buzibu. Dr. Michael Atingego agamba nti wadde tukyalinamu okusoomozebwa ng'eggwanga ebyenfuna bya Uganda bya kusigala nga birinnya bbanga lyonna. Katumweyungeko asobola okutubuulira ebisingawo.
The East African countries remain broadly stable, and these have been supported by diversified foreign exchange inflows, domestic forex market reforms, and increased confidence in the economies of these countries. And as we advance the East African Community Monetary Integration Agenda, we must also reckon with the growing role of artificial intelligence, big data, and digital innovation in finance and the wider economy. These technologies are reshaping labor productivity and income distribution, diversifying financial products and payment systems, and transforming how we assess inflation dynamics, monitor economic activity, detect financial sector vulnerabilities, and communicate policy decisions. They present real opportunities to improve the timeliness and quality of policy making, but only when accompanied by governance frameworks commensurate with the risks that they introduce. As a region, we must design shared artificial intelligence strategies and policies that integrate our systems, capture these benefits, and close the door to regulatory arbitrage, including a harmonized EAC framework for regulatory sandboxes and innovation hubs, and a regional strategy for financial inclusion. At the same time, deepening our financial markets remains a strategic priority. Deep, liquid, and efficient markets mobilize savings, support investments, improve price discovery, and strengthen monetary policy transmission. We are seeing growing interest in instruments such as derivatives for hedging, foreign exchange, interest rates, and commodity price risks. These instruments can sharpen risk management and market efficiency, but only when they are matched by strong regulatory oversight and market infrastructure, so that innovation strengthens financial and macroeconomic stability rather than amplifying vulnerabilities. Harmonized market conduct supervision, aligned with international best practices and paired with robust consumer protection, should therefore be a shared regional priority. Rising public debt across many of our economies presents a further challenge. Preserving macroeconomic stability increasingly depends on close coordination between monetary and fiscal authorities, while safeguarding the operational independence of our central banks. And such coordination is essential to keep debt on a sustainable path, anchor inflation expectations, and preserve policy space we will need to respond to future shocks.
Emmanuel Tutumbu, Gavana wa banki enkulu eya Tanzania, naye atulaga okusoomozebwa kuba China ng'eggwanga. Katumulabe naye asobola okutunnyonnyola.
Central Bank of Kenya remains firmly committed to working alongside the other EAC partner states central banks to ensure the successful execution of our regional integration mandate. Let me also thank the technical officials of the EAC partner state central banks and the EAC Secretariat for the hard work they have put in to deliver the reports for consideration during this meeting. I'm happy to note that progress has been made in implementing the decisions taken by this committee in the meeting held in May of 2025 in Mombasa. I especially wish to note that we are progressing well with the modernization and harmonization of our monetary policy frameworks, strengthening our data collection, analytical and risk management frameworks, deepening policy coordination efforts, particularly with regard to information exchange and joint research, propagating the use of the East African Payment System, the EAPS, to facilitate regional trade, and finally, building human capital in various areas of central banking. We expect economic growth to pick up from 4.6% in 2025 to 4.9% this year and to 5.3% in 2027, underpinned by recovery of the industrial sector, resilient services, and stable growth of the agricultural sector. Growth of credit to the private sector has picked up strongly to 10.6% in June of 2026, from negative 2.9% in January of 2025, and is expected to support growth in key sectors of the economy supported by the lower interest rates. Average commercial banks lending rates stood at 14.38% in June 2026, down from a high of 17.2% as of November of 2024. On price stability, overall inflation declined to an annual average of 4.1% in 2025 from 4.5% in 2024, and has remained within the target range since July of 2023.
Deputy Gavana wa Burundi Waiti Baboth naye attotodde ebizibu bye bayitamu. Katumweyungeko atunnyonnyole.
The youngest member of the East African community, the macroeconomic convergence criteria are not merely regional compliance requirements. They provide important framework for strengthening macroeconomic discipline, institutional credibility, and foundation for required deeper regional integration. Despite fragility and external shocks, Somalia's economy has remained resilient. With sustained growth and single-digit inflation, as well as a disciplined fiscal management. These outcomes reflect a continued commitment to macroeconomic stability. For the fiscal year 2025, Somalia met 3 of the 4 primary convergence criteria. Headline inflation remained below the regional ceiling of 8%. The overall fiscal deficit was approximately 0.4% of the GDP, and the gross debt stood approximately at 11.2% of the GDP, which is significantly below the community ceiling of 50%. However, Somalia's economy remains a highly dollarized one. This is one of our main macroeconomic and institutional challenges. Dollarization limits the effectiveness of conventional monetary policy, constrains the central bank's capacity to influence domestic liquidity and credit conditions, and complicates the accumulation and management of foreign exchange reserves. The reserve coverage is therefore Somalia's main outstanding convergence criteria, with increasing current account deficit. This reflects the structural reality of a dollarized economy. We have already begun steps towards a gradual reintroduction of the national currency. And I thank the Bank of Uganda for their support in that process. This process will require a careful sequencing with a strong legal and institutional foundation, adequate reserve backing, and disciplined macroeconomic management.
Omuwandiisi wa East African Secretariat Anet Semwemba naye alaze ebikyasibye enkulaakulana mu East Africa. Tukusaba omweyungeko akusobola okutunnyonnyola.
On behalf of the EAC Secretariat, I warmly welcome all delegates to Uganda and extend sincere appreciation to the government of Uganda and in particular the Bank of Uganda for hosting this meeting and for the excellent arrangements and hospitality. I take this opportunity to congratulate the Bank of Uganda and the Bank of Tanzania on their respective 60th anniversaries. We also look forward to joining the Central Bank of Kenya in celebrating its 60th anniversary later this September. These milestones are a testament to 6 decades of dedicated service in advancing monetary and financial stability, fostering economic development, and supporting deeper regional monetary and financial integration. Allow me also to recognize and appreciate the remarks that we have heard from all the governors, the deputy governors, and from the chief economist from the Republic of Rwanda, which have provided valuable insights and updates on the monetary and financial situation. Honorable governors, allow me to commend the Monetary Affairs Committee for its steadfast leadership and unwavering commitment to advancing regional monetary cooperation, financial integration, and the establishment of the East African Monetary Union. The committee continues to play a pivotal role in steering one of the community's most important integration pillars. I also wish to acknowledge the dedication and professionalism of the technical officials whose productive deliberations over the past 4 days have laid a solid foundation for the observations and recommendations that will be considered during this session of governors. Honorable governors, we meet at a time when the regional economies continue to face significant uncertainties arising from geopolitical tensions, and I think this has been highlighted by all the remarks that we have heard. Despite these challenges, the East African community has continued to demonstrate remarkable resilience. In 2025, the region recorded an economic growth rate of 5.8%, well above the global average of 3.4%, and the 4.5% growth recorded for sub-Saharan Africa. Our resilience as a region is clearly reflected in trade performance. In the first quarter of 2026, the region's total trade surged to US dollars 46.3 billion, up from US dollars 35.4 billion a year earlier, an impressive growth of 30.7%. Imports rose by 28.1%, while exports grew even faster at 33.3%, reaching US dollars 24 billion. With exports outpacing imports, our trade balance continues to be strengthened, delivering a surplus of $1.6 billion compared to $0.6 billion in the same quarter of 2025. These achievements reaffirm the immense value of regional integration as a driver of economic growth, industrialization, competitiveness, and shared prosperity for the people of East Africa. Despite these gains, the share of intra-EAC trade in the community's total trade remains largely stagnated at between 12 to 13% for more than 2 decades. And this is a huge challenge. Moving forward, our top priorities are to eliminate non-tariff barriers and transform our community from primarily a trading bloc into a competitive regional production hub. This calls for promoting industrialization, value addition, and investment in cross-border manufacturing and strategic industries, including agro-processing, pharmaceuticals, fertilizers, steel, textiles, automotive assembly, and critical minerals. Such investments will reduce import dependency, strengthen regional value chains, enhance the competitiveness of EAC industries, and create quality employment opportunities for the region's rapidly growing population.
Abantu bonna abakulira banka ez'enjawulo bafaayo nnyo okulaba nga gwe munnayuganda ali eyo oba omuntu yenna awangalira mu Uganda osobola okufuna ebyensobulagana ebirungi, bizinensi yo etambula bulungi. Wabula ensimbi bw'oba ozikutte bubi ziyinza okuvaako akaseera konna n'obeera nga mu kisaawe ky'ebyenfuna ovaamu. Tukusaba okwate bulungi ensimbi osobola okubeera nga mu kisaawe ky'ebyenfuna osigalamu oyungemu n'abantu abalala. Nze Kazibwe nkoze ne Badru Kigozi ku kamera. Tukusaba osigale ng'ogoberera omukutu the business trends UG.